Good evening, ladies and gentlemen. I am Nilakshi Morage, Business Analyst for Sunshine Holdings. And on behalf of my team, today I would like to invite and welcome all of you to the second quarter financial year 2023 earnings webinar. Let me first go over a few ground rules. So the webinar will be recorded and it will be then uploaded to our IR website and to YouTube, so you can refer it later. Then initially all participants will be muted while the presentation is going on. And then during the Q&A session, you can unmute yourselves and ask questions or drop a message on the chat box and I will read it out. So let me introduce my team who will be joining this presentation today. So we have Mr. Vish Govindasamy, the Group Managing Director for Sunshine Holdings. Then we have Mr. Shyam Sathasivam, the Managing Director for Healthcare and Consumer Sectors. And we have Mr. Aruna Deepti Kumara, for the Group Chief Financial Officer. Then we have Shanta Bandara, the CEO of CEO of Pharma. And we have Mr. Imtiaz Ali, who's the CEO of Healthguard. Then we have Mr. Sanjeeva Sarnapala, the CEO of Exports. We have Mr. Binesh Pananwala, the CEO of Batavala Plantation PLC. With that, I would like to hand it over to Mr. Vish Govindasamy for the corporate announcements and the group performance.
Good afternoon, everyone. Thank you again for joining our second quarter webinar. So the corporate announcements, which you have been already aware, but for good precedence, I will share this with you. As you are aware, we had Akbar Brothers with a 28% stake in our healthcare business. So in order to gain full control of our healthcare segment and make it a 100% subsidiary of Sunshine Holdings, there was a share swap done at LKR 60 rupees per share, and in return 8.8% shares of Sunshine Holdings was given to them. The second is the divestment of our Pride of Lonak downstream business. I think there was a little confusion. So there was no sale of the dairy segment. It was just the Pride of Lonak downstream business to the Ross Dairies Private Limited for 27 million. Moving on to the group performance, happy to inform you that we closed the second quarter with a 13.2 billion revenue, which is 56% quarter on quarter, and with a 1.6 billion PAT, which is 9.5% year on year. The highlights are our ROE is improved to 31.4%. Our leverage has gone up. That is mainly because our export business, which has come on to the group by acquiring that business, and also additional working capital requirement that has come in. The revenue composition, as you can say, healthcare still continues to be the largest revenue producer, with consumer second and agri as the third. Giving you the group highlights for the second quarter and the first half. As I mentioned, we have had a 56% revenue growth for the quarter, almost similar for the half year. And this revenue growth includes the Sunshine Tea Limited, which was acquired by the group. Without that, we would have a growth of about 32.3%. The other point here is that we have had a small setback in our GP margin by about 525 basis points, and it's mainly due to the dilution created by our export business, which has smaller margins. and a reduction in margin in the agribusiness. But the rest of the numbers, I'm sure you have seen, quite clear, but during the question and answer, I'll be happy to answer any questions.
Thanks, Vish. So with that, let's move on to the healthcare sector. Shanta, over to you.
Yeah, thank you, Nilakshi. Good afternoon, everyone. I would like to first take you through some of the highlights from the healthcare sector and in terms of revenue split and how the healthcare sector asset split is been placed. You may see, while as GMD mentioned, healthcare sector is one of the largest contributing sectors in the group. In healthcare sector, pharma and the distribution business contributes to 71% of the revenue, and second by medical devices, which contributes to around 17%, and our retail outlets contributes to 9%, and the pharma manufacturing, which we embarked a few a year back or so, contributes to around 3%. While our revenue split stands, while pharma is contributing a larger percentage, when we look at the asset split, again, pharma does consume quite a large portion of the asset base, while the medical devices also, while they have invested in equipment in hospital, the split goes up to 26% in terms of medical devices, and the others a slight percentages, as we see, where the manufacturing contributes takes about 10% of the asset base. Moving on from the segmental sort of analysis here, the Q2 results, you may see a revenue percentage increase of 27 for the Q2 compared to the previous quarter. This is mainly coming from the Q2 fully taking over the price increases that were granted for the pharma business. And the EBIT, you may see at almost 112% increase is mainly contributed by the price increases that we were able to implement during the Q2. Which came through in the mid part of the Q1. While the price increases were granted, must make a note the significant exchange loss that we went through, and some parts of the EBIT is contributed by the timely decisions we took in terms of managing our cost well. And with that, we are reporting a PAT increase of 42%. For Q2, and also for the second for the first half, we are reporting a PAT growth of 52%. Further, to give you a highlight on the pharma business, where the pharma business continues to be the fastest growing business in the industry. Whereas the pharma team was able to beat the market growth and hold as the fastest growing pharma company in the industry in the last, I would say, almost 2 years, we were able to hold the line on this. And that's a highlight from the pharma business. And moving on to the next slide, I would like to give you a quick snapshot how, while the pharma business holds the growth factor, we are going through a significant impact on the volumes. The volumes are being challenged due to the price increases and all the reasons that all of you are aware of in terms of the disposable income. Therefore, the volumes are under challenge, and this is one reason how that has come about. And if you look at how the dollar has moved in the last almost 1.5 years, from a 200 base in April 2021 to 370, where the government granted a certain amount of price increases for the pharma, where the pharma operates in a price controlled market. If you index it from 100 point in April 2021, we are at 197 in terms of the price increases granted. So this is the industry as well as the company was compelled to take certain price increases to hold their GPs up to a certain level where the business is import based, where the dollar plays a bigger role. However, this impact has come about in terms of the volume drop that we are currently facing. And moving on from here to talk about our medical devices, some of the highlights. We see that hospital occupancy in the last 2 quarters have been slightly down, and especially in the Q2, you may see that it has gone to about 71%, where the hospital business has a slight reduction in their activities. And the major impact here that you may see is in the lab tests in general has gone down from the previous Q4 at 98% to 76% and now to 61%. And theater level has been holding on. Some amount of improvement have been seen. Some amount of activity has happened in the hospital in terms of the theater operations. Moving on from here to our manufacturing business, I would like to announce a revenue growth that we were able to record year on year compared to the Q2 last year of 31%. And also the GP margins were under pressure due to various issues. One big reason being the dollar impact that the business had on it. And happy to announce that we were able to deliver the first government order of our meter-dosed inhalers in the month of July. With those highlights, I would like to hand over to Infias to take over through the retail business. Infias, over to you.
Thank you, Shanta. Good afternoon, ladies and gentlemen. Let me take you through a quick snapshot of Healthguard. So Q2 and previous quarter, Q1, both were a challenging quarter for the business. We did experience a more significant challenge in Q2, primarily due to the external disruptions in fuel shortages, etc. Adding to this challenge was, of course, the significant price increases that we saw in the pharma sector. This actually led to a big drop in demand across the chain, especially for both pharma and wellness related products. Consumption per customer actually went down in both pharma and more significantly in wellness, primarily due to the price increases and the high cost of living related expenses. And we saw, therefore, overall volumes decline. We also have seen a challenge in terms of footfall. We believe that people who were also prioritizing which locations to go to, primarily because of convenience factors. So the footfall coupled with low consumption has really had an impact on Healthguard's overall volume performance. So year on year, we were actually about 13% revenue growth. But we continue to engage with our loyalty base, and that has shown some positive improvement. And we have also been focusing on optimizing and right-sizing the business model once again to address the current realities and to manage our business better. With that, I will hand it over to Sham to take you through the consumer division.
Thanks, Infias. Thank you all for being on the call. Let me take you through the consumer business. Of course, the highlight of the consumer business, as you heard from Group MD, was the acquisition of Sunshine Tea in the first quarter. And therefore, now the consumer business has about 45% to 47% exposure to exports. So that's a significant change in the business composition in our consumer sector. as well as you can see, the assets invested in the business. Moving on to the results of the business. Of course, significant growth because of the acquisition, but underlying consumer revenue growth is for the second quarter is at about 34%, but significant growth overall for half year with the acquisition. The export contribution is separately, listed out for you at about 4 billion revenue and about 330 million PAT for the first half. We continue to see this as a performing opportunity for us, having exposure to exports at this critical juncture, and for the consumer business to continue to grow in terms of exports, right now focused on tea, and hopefully in the future into confectionery as well. The bottom line has been challenged from a context of the domestic consumer business, but the addition of the export business has significantly improved the overall results of the consumer sector, as you can see. So showing good growth in the bottom line here. If I go into the specifics of the consumer business, the domestic part of it, which is our tea brands, Zesta, Vatawala Te, and Rankahata, as well as our confectionery, Dainty, and My Lady. In the tea business, we have seen significant challenges in terms of volume growth, with large price increases taken during the last 6 months or to over a year, with the cost of tea being quite high. That pass through to the consumers has led to significant volume reductions, and we've seen the sharpest volume reduction in the second quarter. Of course, the price growth, 45% price growth, is why we have a overall revenue growth. In the confectionery, volumes have not degrown but have stayed flat. While we have taken significant price increases in the confectionery sector, the volumes have been flat because of availability pressure we have kept. We've continued to be the most available products in the confectionery sector at the grocery level, and we hope that this will continue to sort of pay dividends for us. Of course, there's been the last 2 quarters have seen significant disruptions in activity due to fuel, etc., which is dialed in to half of Q1, the first half of Q2. So Q3 will probably be a more business functioning normalized quarter, but at high inflation, consumer affordability would be the challenge. If I move on to specifics in the tea business, domestic tea, as you can see, the tea auction prices have been at an all-time high. This is to do with the production of Ceylon tea production being lower than the past, significantly lower, as well as the adjustment to the depreciation, but it's gone beyond that. We are at our highest peak dollar, I think, cost of Ceylon tea. We have not been able to pass on all of those increases to the consumer. And with just the pass through of the prices, you can see the volume impact, right? From a peak of 1.5 million, we're down to 1 million kilos in the second quarter. So this is something we will continue to sort of pay attention to. Moving on, market shares. We have been aggressive in this declining volume market to maintain our market shares. Sunshine Consumer is a market leader of the domestic general trade, as the results here are 47%. And that's something we want to continue to hold on to. And of course, with a market share coming from modern trade, etc., we are clearly over 50% of the domestic market. So we will continue to sort of focus on maintaining market share. Moving on to confectionery, I spoke about the fact that there were price increases driven by raw material increase, primary raw material being sugar. And that was the initial sort of set of issues leading to price increase of product. We've thereafter had other challenges in securing raw material, especially imported product raw material, and also the coinage issue. Our price points have to move in full rupee terms or beyond. So broadly, from 2 rupees, it's moved to about 5 rupees now at the entry level sort of confectionery that we have. Volumes have been flat from last half year sort of thing. But I think broadly our context is to see how do we continue to sell more units going forward. Market share, again, here's something we're very focused on in this sort of declining market or flat market. To maintain market shares, we hold 32% market share. We're the market leader here, and we continue to sort of focus on making sure we are available, as I spoke about earlier, across general trade. And of course, this was disrupted through those periods in April, May, June, July. But broadly, I think things have normalized back on it. Now it's a question of having product available in the market. I will hand over to my colleague Sanjeeva Saranapala, who manages the tea export business, to take you through the export component of the consumer sector and of Sunshine Holdings. Over to you, Sanjeeva.
Thank you, Sean. If I may speak about the export business, the volume for the second quarter, we had a drop of 6% year on year. This is mainly due to the high tea prices that was witnessed at the Ceylon tea auctions. This comes in relation to the lower crop of 11% we have seen in the second quarter that was available in the market. Also, it is due to the market's economic slowdown in countries in Europe, UAE, and also the COVID lockdowns coming from the Far Eastern countries. So as a result of that, we have had a drop in export volume year on year of 6%. However, we have seen an 87% growth on revenue year on year from 1 billion to 2 billion rupees for the second quarter. In terms of the third quarter, we feel that the continuation of low crop is going to continue, but as a result of the winter buying stopping in Russia, we feel that there might be a drop in tea prices, which might be beneficial, but we feel the quantity drop in exports will go into the third quarter as well. Thank you, and I would like to pass it on to Binesh now for the agribusiness.
Thank you. Sorry. First of all, let me start with the revenue split, which is basically for both companies, with the Waterwala Plantation as well as Waterwala Dairy. The Waterwala Dairy carries 12% of the revenue split, and the rest is the palm oil business, which is 88%. But when it comes to the total asset split, it comes to 67% and also dairy 32%. Moving on, I think when it comes to the total performance of the business, in first half, the revenue grew by 34% as against the first half of 2022. It is mainly because of driven by the price factor of palm oil. Then in terms of the second quarter of the current year is also grown up by 36%. Is also the main reason is that the price factor. But in the meantime, that the first half, the crop had been slightly lower than the last year, mainly in the due to the issue with regard to the fertilizer, and also that the non-availability of fertilizer, also a high cost of it. So currently, this matter have been resolved up to a certain extent. The fertilizer is available. Therefore, we see the crop will maintain in the quarters to come. So in the global scenario, moving on to the next slide, on the global scenario, the palm oil prices have been maintaining high for this during the second quarter. However, there is a significant drop during the month of July, August, and now it's been maintained around 3,700 to 4,000 ringgit. So this is a significant event. But in the other hand, price special commodity levy, which has been imposed by the government, has been maintained since 2020. Moving on to the next slide. In terms of dairy business, let me take you through the average milk prices have been increasing, mainly due to the demand and also lesser volume what is available locally, and also this had an impact in importation of milk powder to the country. As a result, the milk prices, there is the increase is there, and also the potential is there for locally produced milk. In the meantime, due to the non-availability of some of the feed material and also the high feed cost, we saw a drop in milk volume in the first quarter of 2023, and then we see now it's been stabilized as the feed is available, and also that it comes at, though it is the challenge is getting the feed at a lower price. The volumes are now it is coming through. Now I will hand over back to Nilakshi to take you through, and I'll take any questions later on.
Thank you, Binesh, and thanks team for the insights on the quarter performance. So I will now open the forum for any questions you all have. You can unmute yourself and ask questions, or you can drop a message on the chat box. Naveen, do you want to unmute yourself and?
Thank you, and thank you very much for the call. Just a quick question on the consumer business. You all saw a volume drop in tea, but what's a bit surprising is that your volumes were flat on the confectionery business. Now, that being a bit of a discretionary spending item, seems a bit surprising. What's your take on that?
Yeah, thanks, Naveen, for that. I think I wouldn't call it the lipstick effect. I think it's the context of with nothing else being affordable. I don't think the price change between 2 to 3 or 3 to 5 rupees made a significant impact at the consumer level. At the entry point, of course, there was volume drops in the higher price point items once we got to past 20 rupees, etc. But most of our volume is at the entry level. We also think it was a context of just greater, there was unavailability in the market across other competitor products, imported products, etc. So I think that also gave us an opportunity of maintaining volumes by ensuring availability was there.
So Shyam, if you're looking at for the next few months, would you expect to see a volume drop there, or would you think that you all will be able to maintain volumes in that segment?
I think we should be able to maintain volumes. One is sugar prices are dropping, so then there will be some price saving, cost saving we can pass on to the consumer on certain places. But broadly, even holding prices the same, we're reasonably confident that volume should hold into Q3. But it's hard to predict beyond because of we depend on the sugar pricing as well.
Okay. Thank you very much. Thanks, Shyam.
Thanks, Naveen, for the question. Asanka, you can unmute yourself and ask.
Thank you. Can you guys hear me?
Yes, we can hear you.
Sure. I think after price increase on the pharmaceutical side, even in the first quarter, there was substantial jump on the operating profit level. And the question then was also, while the volumes are coming off, is it really coming off as to have be a drag on the bottom line? So my question is that now we are in middle of November, about 1.5 months into the current quarter, leaving aside future projections, at this point in time, are you seeing a slowdown in volumes on your pharmaceutical distribution side compared with the September quarter, compared with the June quarter?
Shanta, do you want to take that question?
Yes, yes, thanks, Asanka. I think the experience on the volume drop is month on month. It's I would say the volume drop has increased for certain products. So therefore, certain products are going down in terms of even surprisingly, the chronic segment also has seen a volume drop. All of us could understand if it was vitamins and certain wellness products due to the price and nice to have products, but we do experience the chronic segment also going down. Therefore, from June onwards, the volume drop has been experienced, and we see even in October the volume drop was quite high than the previous 2 months. So therefore, I think it's going to reset. It's resetting itself in terms of the volumes in the market due to the various reasons that we discussed. And our projections are also moving into the next quarter. We would project a certain level of volume going down. I hope, Asanka, I answered your question.
I think so, but if I can clarify, do you meant to say that with the price increase, are you expecting the current quarter revenues to be lower than the previous quarter? Or is the price going to compensate sufficiently for the steepening volume decline you are seeing?
So the price increases have still have held certain level of value in terms of revenue, but we see in the Q3 the projections are such that this may not hold. The volume drops are steeper, so therefore we will not I would say materialize the price increase and that setting off the volume drop. So it could go beyond.
Understand. Thank you, Shanta. I have a similar question on the tea business. What we have noticed is that both Zesta and Unilever has actually reduced the price of tea over the last 1.5 months. Are you seeing decline in volumes there to the extent that it will offset the price increase as of middle of November, or you think the price increase will compensate for the volume drop?
So I think in the short run, price increase will compensate for the volume adjustment broadly, but consumer reaction to such large price increases at a time when everything else is increasing. I think food inflation is at 70% plus, with incomes being flat. So it is uniquely difficult to predict because the entire basket of essentials is higher. So the impact of tea price changing and their behavior adjusting is harder to read.
Understood. Thanks.
Thank you, Asa. Anything else?
No, I will come back to you if there's any more questions.
Okay, thanks. Thank you. So we have a question that was sent. I think this will be for Binesh on Agri. When do you expect pact level break even for dairy?
In dairy, I think, as I mentioned, that the main challenge is the availability of feed material and also the price escalation in the feed what is required for dairy. So I must say that from the first quarter to the second quarter, the availability of feed has improved significantly. And then other side of that, the increase of the price. So the PAT, we are expecting it to be break even the third quarter. So that's our expectation as of now. Hope I answered the question.
Thank you, Vinesh. Shavin, you can unmute yourself and ask.
Yes, just a small question with regards to the pharma segment. With GSK exiting the local market, just want to understand if that will have an impact on Sunshine's business or how, what kind of impact that would have.
Yeah, so let me take that. Broadly, I think we have seen this trend across the large international healthcare players in the market who had established offices, country offices, subsidiaries here, exiting this market for various reasons. Primarily, I would think for value, significance, and costs and growth, etc. As long as products are available, then market share for those sort of prescribed products should hold in the short run. As of now, most of them have been committed to having products available in the market. So I would think market shares for their brands would hold. Therefore, the rest of the market should hold. There will be some adjustments on, distribution, etc., but nothing in the short run.
Thank you, Sham. Shavin, I hope that answered your question.
Yes, thank you. Just a small question on the tea export business as well. With sort of global markets slowing down, what is the volume expectation on tea? Is it expected to reduce, or do you all expect volumes to hold?
Yeah. So from Sri Lanka, we see that there will be a reduction due to the drop in production and also to the slowdown in the economy. If we take our export business third quarter, we expect a similar drop in quantity of about 6 to 8%. Hope I answered your question.
Yes, thank you.
So we have a question from Michael. Vish, can you take this question? I'll read it out. Any reforms or budget changes coming through that may benefit or hurt Sunshine, especially pricing reform that can free prices to make convenience store pricing possible?
Yeah, I don't know of any pricing reform that has come in the budget as far as I know. But the only thing that can hurt Sunshine is the increase in tax. I think the corporate tax all around has gone up. So Sunshine, each one of the companies will have an increased corporate tax. That's the only thing that I can think of. And the social security levy for some of our companies, I think our healthcare company will not have. Pharmaceuticals does not have the healthcare levy. But the other companies will have to pay the healthcare levy or the social security levy of 1.5%. I hope that clarifies Michael's question.
Thank you, Vish. Asanka, you can ask your question.
It's a question on the market share in both the tea and the confectionery segments. Are you seeing the smaller players in both of those segments making a comeback in the ongoing quarter?
If anything, it's the opposite. I think the smaller players have found it very difficult to operate in both spaces because raw material costs are high in both. And this is something we've typically seen in the tea. Lots of smaller players, unbranded players, exit the market when tea prices are high and then sort of re-enter when it's lower. Same confectionery also, I think with raw material prices being high, we don't see a lot of small players operating in the market.
Thank you.
So we have a question on the tax impact. Aruna, maybe you can take this. What is the impact of the tax increase on the group?
Thank you, Sharon. Yes, there is a tax impact to the group, which is approximately based on the current condition. We worked out compared to last year, it's approximately 20% increase year-on-year tax.
Thanks, Aruna. So we have a few more minutes. Happy to take more questions. Binesh, one question to you. What is the progress on the maize cultivation?
Yes, we have already started cultivating in almost covering 600 acres in various parts of the country, and with the Maha season or the current season on, we have almost done seeding almost over 30% of the land what we have. So it's ongoing as of now.
Thanks, Binesh. Naveen, you can ask.
Thanks. Quick question on the pharma business. In terms of your pharma distribution and also the recent production batches that you delivered to the government, what kind of receivables do you have from the government? And also on your pharma imports, are you importing anything that is coming through the Indian credit line? Thank you.
Sure. So definitely we have exposure to the government, both in local manufacturing in our Lena business, as well as in both our pharmaceutical business and in our medical devices business. Some of it is direct by our principals to the government, so there is no exposure to us there, but everything else that's been sourced locally, there is an impact. On the Indian credit line, I think Shanta, the CEO, can share more on that. But overall, we do see significant increases in government debtors for us, as they are a large customer for the overall healthcare sector. Shanta?
Thanks, Shyam. Yes, Naveen, I think from the Indian credit line, initially it was quite helpful. I would say June, July, the attitude from my team was, can we get maximum usage of the Indian credit line, which we did. I think we participated, and some of our principals were quite diligently was able to get into the documentation, which was quite a lengthy documentation which was required, and it was very new to all of us, including some of the authorities who got involved. So I would say the group, largely the pharma business, was able to take a good usage of the Indian credit line. One issue was that we had to pay the suppliers on site. That means just before we got the goods down, we had to pay for it. So therefore, there was a significant outflow that we faced, and right now that has impacted with the volume drop. We're facing a bit of a overstock situation because we were prioritizing availability. Everybody was scared that the products would go out of stock, especially the chronic segment, as I spoke, which has actually gone down in terms of volumes now. But in June, July, the risk was going out of stock. So the dynamics changed quite a bit. And right now, what has impacted in Q2 is that we would have quite a bit of availability, and we have made it available to our distribution arm, and we are paying quite a high interest on the dues. So that's the update on the Indian credit line.
So how much of that 9 billion receivables that you're currently showing is from the state?
I mean, we don't break out between private and government. Broadly, our exposure, big picture, would be across healthcare about 15 to 20%.
Thank you.
So if there are no further questions, we can wrap up this session for today. I would like to thank all of you who joined this quarter's webinar. I hope you all got enough clarity on the quarter performance. I also hope to see you all again in our next quarter webinar. Thank you and have a nice day.
Thank you.
Thank you.
Thank you.